Per usual, living on the channel for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at some legacy data points. But first things first, a few news items over the past week. This one today being CZ and Binance potentially settling with the U.S. government Department of Justice for $4 billion. I believe there's also potentially a CFTC suit, maybe an SEC suit, maybe other stuff. But this is a great outcome for the exchange, considering they can pay this probably very easily. It doesn't close the exchange. I still wouldn't trade there. I wouldn't put any money there. Personally, they still got people in the C-suite leaving every other day. They've got countries shutting down their banking every other day. Before the industry will take it, right? Eventually, what's going to happen is, look, DeFi is going to be KYC'd. Binance is going to be out of the US entirely. I don't think they mentioned Binance US in any of this, but I'd be shocked if Binance US continues to operate. Maybe that'll be part of the deal. So we'll see. But Binance itself lives to die another day, as they say. And BNB was up on the news. Chart pattern to me is still bearish. I wouldn't touch this. I wouldn't touch any exchange token. I just think the regulatory attack surface, the risk is too high for me, right? I guarantee you people are going to make a ton of money on all of these altcoin exchanges, DEXs, whatever. It's just not for me, not the heartache. It's just not worth it. Anyway, we also had the worst named exchange maybe ever called Bullish, which is owned by Block One, which ran the EOS ICO, complete their purchase of CoinDesk, which is good for, at the end of the day, it's good for the Gemini people because DCG, Barry, Genesis still owes Gemini a ton of money. And if you're curious on where all that stands, I'll put the link to this in the description of the video, but that's still ongoing. So CZ lives to die another day. Barry getting closer to living to die another day in a business sense. So far, seemingly unscathed. I think they've got some legal issues in the District of New York, whatever that is, the financial powerhouse there. But we're getting closer. Then we, of course, had my old company of employment, Valkyrie, potentially making an M&A deal with CoinShares, which makes sense if CoinShares wanted to get in the United States. They are a very large ETP issuer in Europe. And let's take a look at the weekly report from James at CoinShares. We continue to see inflows, which is, look, it's exactly what you'd expect. I heard a CTA or somebody last week say, why aren't people waiting for the ETF? Why are people buying now? Probably because they don't want to wait for that price appreciation. We're going to have ups and downs. We're going to have crazy volatility. Maybe we have a recession, blah, 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 right? But the general idea here is the more flows we get, the higher prices likely to go. So if you're betting on higher prices, you're betting on the halving not being priced in, you're betting on the ETF not being priced in, and you're betting on positive inflows into the ETF in the United States. If we look at where the flows came from, mostly into the Bitcoin products, out of the short Bitcoin product, a little bit of Solana, a little bit of Ethereum, a little bit of multi-asset. So you do see alt inflows here that make sense relative to what we've seen a little bit over the past week, right? We're not seeing money coming out of these products. So the ETP flows coupled with the stablecoin inflows collectively to some degree help make sense of that price action. And a lot of this coming from Canada, Germany, Switzerland. As far as this week goes, again, it's a short week. It's Thanksgiving. Hope everybody has a great holiday. Nothing major this week as far as news releases. You know, there's the usual data points that no one cared about a year ago. And then some more stuff next week, which GDP is big, you'd argue, PCE is big. But overall, ISM, you know, all this stuff is going to look terrible again, right? Nothing's probably going to change too much, but I'm sure the market's going to freak out at one of these numbers getting released and everything's going to matter all of a sudden. Looking at the CME rates probabilities here for the Fed, market's fairly convinced we will not see any more hikes. We will only see a cut, and that cut is being priced in for just after Bitcoin's halving in May next year. These have historically certainly not been accurate. It's, you know, it's just the market's best guess based on the available data. So this will change from month to month, week to week, but certainly lining up favorably for Bitcoin, assuming we don't see a mega downturn recession-wise in the United States. We can sort of guesstimate where that recession may start based on Fed pauses, based on historic time periods of pause to recession periods, right? People are trying to put these pieces together. I don't think this is terrible to consider, right? But I think trading around a recession right now, which is what the doomers want you to do, is I think a little silly. And by the time we get a confirmed recession, people won't be asking, when is there going to be a recession? So at least for me, I don't know how people are ingesting this data, but when people hear recession, I think they clam up and they go to safety. So look, summer 2024 is a long time from now. So I don't see that as super, super duper important to the market. If we look at Trueflation, we've popped up to 3.08 now. And this may be our new world between 2 and 3.5 on Trueflation. Maybe that's 3 and 4 on CPI. But if Trueflation is having trouble staying below 3, then I think it's unlikely over the next year that CPI is going to stay below 3. There's probably going to be a period here coming up in the next couple months where Trueflation may be higher than CPI. CPI is projected to continue to come down. Trueflation is more real-time data. CPI's got that lagging housing component. So if we're bullish, what we don't want to see is Trueflation hitting 4 or 5%. I mean, that's not a good sign, because then we get stagflation, recession, and it gets ugly and sets up great for summer 2024. It sets up great for aggressive cutting by the Fed, right? That's something to watch next year. If we look at the projected Fed estimate for CPI this month, 3.1. So we continue to head in the right direction, just as we did last week. And if we put it all together, we are still far below Fed funds rate, far below what we expect the Fed to hold at. So higher for longer may just mean the current rate until May next year. Assuming nothing breaks, that's the current market expectations. We are seeing, thanks to Charlie Bilello for putting this together, we are seeing inflation rates generally come down in most countries, right? So this is a great sign. And another piece of huge news, I didn't talk about Argentina electing, I'm going to butcher his name, Malali, whatever his name is, uber libertarian. So we'll see what changes he can bring about in that country. But in general, CPI, inflation coming down across the board. We're also seeing a ton of Black Friday deals come down the pipe, especially on a year-over-year basis. We're seeing more items discounted for more than the previous year. And just as the headline suggests, maybe this means the consumer's weak. Maybe this means the consumer's increasingly tapped out. So watch for the markets to get spooked on consumer data when this information is available, probably next year into the quarterly reports. But something to just anecdotally pay attention to this Black Friday. Turkey prices came way down, thanks in part to bird flu running its course. You're not really seeing that on the grocer side of things just yet, just because they pre-order their turkeys right ahead of time. So in any event, good news on the turkey pricing front, and cost of a meal for Thanksgiving also down slightly. I see a lot of back padding from the current political establishment saying, thanks, Joe Biden, for making my blah, 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 right? And, I wouldn't go that far, but it is down on a year-over-year basis, which is good news for everybody. As far as GDP is concerned, still flat, still holding the estimate at around 2%. So, the doomers can continue to doom. And I don't know what to tell you. Look, we're pulling money out of reverse repo. This is money that is moving from ultra short-term yield to short-term U.S. Treasuries. That is allowing us to continue to issue debt without yields ballooning even higher, which would pull money out of risk even more. And we have about $1 trillion to go. So interestingly enough, the timing of this running out also lines up with that April-May period when the Fed is likely to start cutting. So it's definitely something to watch into 2024. If the overnight reverse repo does absorb as much U.S. Treasuries as it can, what happens? Does the Fed even let it get to that point? Does the Fed intervene essentially ahead of that, knowing that there's going to be some issues in the front of the curve? Just something to think about in the next year. And, we saw 5,000 blog posts about the failed or nearly failed or terrible, right? Whatever you want to call it, 30-year Treasury auction last week. Today, this one looks just fine for the 20-year. So it's easy to be a doomer. It's easy to look at all the negatives. Not saying there aren't data points that support the doomerism, but you're probably not going to see as many blog posts about this auction as you did the last one, okay? TLT also looks good from a technical perspective. A daily edge-to-edge on the cloud here initiated. It kind of sort of made an inverted head and shoulders a little bit. TLT is certainly at the whim of how well these auctions go. If the auctions go poorly and yields go higher, TLT goes lower, so keep that in mind. But generally, just purely technical, this looks good for a move to 93, potentially even by the end of the year. Stocks and bonds have been moving together, so as well as stocks look, it would make sense to me that TLT continues to move higher. Yield curve remains inverted. Yield curve looks like it's re-inverting. So it tried to uninvert and now it's re-inverting. So we continue to push off and delay what is likely going to be some sort of recession after the uninversion happens. So again, we're early for the recession stuff, right? Everybody was panicking at the inversion of the yield curve being a recessionary indicator. Certainly has been historically, but the real truth of it is it's the uninversion that gets you, not the inversion. So there's plenty of time left, okay? And I'm telling this to myself. This is some self-talk as somebody who's sitting in probably too much cash still. I thought this was an interesting table looking at, as we come up to the end of the year, looking for predictions and trade ideas for 2024. B of A put together this contrarian list. So on your own, it's interesting to see what your own personal viewpoint is of this stuff, right? Do we have a hard landing? Do we have higher inflation? Do we have higher rates? I think most of these outcomes are expected, honestly, for 2024. So it's interesting that this is the contrarian viewpoint, and we'll find out what this looks like in 2025. But I think we do see higher inflation in 2024. I do think we do see higher rates. I think the geopolitical risk gets better because how worse can it get, right? It's already pretty bad. I would love to see a lower dollar. Prices based on technicals certainly suggest that. And I don't think the Mag 7 underperforms based on where we're sitting. We'll take a look at those charts too. So we'll see. Some of this is mixed, but just an interesting list. DXY on technicals, edge to edge complete, head and shoulders likely completed. The target down here. If we continue to hold on Bitcoin at the current prices with DXY continuing to weaken, eventually we should see a pretty strong tailwind for Bitcoin, along with the ETF approval. If we haven't moved and DXY continues to push lower to 102 to 101, I doubt we see that. But if we do, that makes me even more bullish in a sense, with the bullish divergence growing, for Bitcoin to continue to move higher. So this is the type of environment we want to see. We don't want to see DXY strengthening with a positive news catalyst, okay? So the next step from here is to watch how DXY reacts around that $100 level. Oil's bounced quite a bit from arguably the head and shoulders zone where you'd expect it to bounce. I think OPEC came out and said they're going to continue to cut production, but it's good that this remains in the range for everybody. Nobody wants $100 oil at the end of the day. Something else to watch relative to oil is XLE, which is an energy ETF. Looks to have survived by the hair of its chinny chin chin here on this ascending triangle. And again, maybe something to watch into 2024. Kind of similar to ETH in a sense that it's taken its sweet old time, right? It could take another 6 months before this breaks out, but I still think it's worth watching. Something else that's definitely worth watching is a recent sit-down Michael Howell did with Blockworks, where he talks about global liquidity cycles. To me, he's the king of global liquidity estimations, and he puts together this long-term 5 to 6 year cycle chart. But I would definitely recommend listening to the whole thing. And to contrast that, we have Urian Timmer, who's kind of saying, look, central bank liquidity continues to decline. So it does matter what you're measuring here, obviously. I agree with Michael more than Urian, even though I love Urian's work. I'm guessing there's something that he's missing here in his equation. I'm not saying he's wrong. He could be very well right. But I think a big part of this RRP drain is where a lot of this uptick in global liquidity is coming from, along with Japan and China stimulating their economy as well. So to the end here, we mainly have charts, and look, I don't see anything bearish anywhere on technicals. Okay, like what? Are you going to be bearish on a local high retest? Are you going to be bearish on a daily cloud breakout? This is dependent on Mag 7, Mag 6, whatever you want to call it. Looks amazing. Do we hit 56? I think that'd be absolutely wild if we did. but I don't want to bet against it, right? What are you going to do? Stay out of the market because you're afraid of a recession? That's perfectly acceptable. Look, you can get 5% long-term rates, whatever, right? I get it. But this chart continues to look phenomenal, and once it gets above 4,600, it's going to be hard to not elect Biden. Unfortunately for everybody who hates Biden, it's his election to lose if the S&P breaks 5,000. Okay, so 2024 is going to be an interesting year from that perspective as well. You've got end of the year seasonality favoring continuation as well, sniping the local low here, October 27th. Very interesting chart. You've also got point and figure gibberish, which I'm not going to explain, but it's another charting system pointing to 5,400 as a potential target. So I think it's just hard to be bearish right now. Somebody had asked me about the S&P 493, right, without the Mag 7, and you can see the outsized effect of the Mag 7 on the S&P. The 493, the contribution is minimal, right? Up 2.6% on the year versus the Mag 7, up 12.25% on the year. So we certainly know who's doing the heavy lifting, and it's important to just have an opinion on the Mag 7, right? To me, they continue to look good. We'll look at that in a second. And you'll continue to see comparisons like this: S&P relative to banks, S&P relative to commodities, S&P relative to global. I don't know. I don't care, right? To me, yes, of course it's overvalued. It looks insane, but the tech is the tech, and the tech looks extremely strong for the Qs, for S&P, for the Mag 7. Qs breaking a yearly high here today, right? NVIDIA all-time high, I'm pretty sure today. This almost looks like it's ready for an all-time high as well, pointing to a target 5 to 550 potentially. And if we want a real wild ride, watch the Qs go to 550 and then have some recessionary crash to like 200. I don't think that's possible, but I know people are extremely bearish on pricing in a recession eventually. Now, the lower stuff on the totem pole, like IWM, if we take out IWM without the Mag 7, it's underperforming short-term treasuries. So it's definitely a case of the have and the have-nots still, and continues to likely be the case because of the cost of capital being so high for these smaller companies that can't afford to borrow, whereas these larger companies don't need to borrow. And if anything, they're getting paid to sit in cash. They're getting paid on their treasure chest. I think one of the best charts of the Mag 7 is actually Amazon. This looks phenomenal to me. It's above the daily cloud. It's above the 200-day moving average. 200-week moving average. Weekly cloud. Inverted head and shoulders. Weekly cloud about to flip bullish. There's a yearly pivot in there that you can't really see that it's above. So yeah, I like 185 to 210 for Amazon, which would be a new all-time high. It's going to have a hell of a time breaking the previous consolidation, 160 to 170. But this thing looks great to me. This is a very bullish chart. Certainly something you'd expect to go higher. They also announced a deal with Hyundai to sell cars. So, if you thought the Amazon monopoly wasn't already big enough, I can't imagine that hurting their stock price. Apple also looks decently okay, pushing for new all-time highs, potentially. Daily cloud looks fine, above the daily 200-day moving average. 215 to 227 is how this measures, and sure, why not? Looks great. What's going to hold this thing down? You could argue all these are overextended, all these are way too bullish, like Microsoft, right? Look how overextended this is. But it had its pullback. I'm not saying it won't have more pullbacks, but looks good, right? Huge cup and handle here, above the daily cloud, points to 430, 485, based on the measured move. They survived the Altman coup and picked him up as a leader for their AI arm. So yeah, let's go, Looks very good. I don't think you'll see a retest at 350, but if you did, that's where I'd plan on buying. At this point, it's probably too late. But that's a new all-time high for Microsoft as well. Google probably looks weaker amongst the bunch in a sense that it's less bullish, but it's still very bullish. Above the yearly pivot, above the daily cloud. Look, all this stuff measures to absolutely wild targets to the top side. Meta continues to look very good, also making a new yearly high. And you can see how the Qs and the S&P start to actually potentially maybe hit those targets, those wild targets, if the Mag 7 has another run, which they very well could because they've consolidated for a couple months here and very much look ready to continue. NVIDIA, I believe this is an all-time high for NVIDIA today. The head and shoulders here has officially been invalidated with a break of the right shoulder. So that was last week. It's above the daily cloud. The cloud has flipped neutral back to bullish, right? This is something like on the 4-hour link chart or the Solana 4-hour. This is the type of thing you want to see for bullish continuation. I would much rather touch Microsoft or Amazon than Nvidia personally, but I don't think there's any reason to be bearish here just based on the technicals. Not until maybe 600, something like that. So these charts look good. They look very good. And I'll just contrast that with gold. People still talking about gold. Look, until the Fed potentially cuts, depending on how you want to read this chart, gold just refuses to break out. And with the Mag 7 acting like they are, why would you pay attention to gold at all, right? Maybe February 2024 is when you start rotating into gold. But what is there to do here with gold? It can't hold on to 2K. Lastly, let me just talk about a few of the crypto plays relative to potential news events, BlackRock ETF having whatever coming into 2024. If we look at the biggest companies with Bitcoin holdings, MSTR, Mara, Tesla, Coin, Block, Riot, in the US at least. So if Bitcoin starts to do very well, it's very likely that these companies also start to do very well relative to their treasury holdings, right? CleanSpark all the way down here, they've got next to nothing, but I'll leave this in the description if you want to check it out. So just looking at MSTR, depending on where you want to draw this pitchfork, look, I don't care what anybody does, but this makes sense to me. You could argue you want this high versus this one, whatever, doesn't matter. Point is, this looks great, looks phenomenal, hard to be bearish, continues to make higher highs, continues to test support and move higher. As long as it can hold 434, why not 700, why not 800 down the line? It's definitely a, gluttony of choice here on what you can trade. You can trade coin. Coin continues to move higher. 150, 185, 214. I like anything up here in 2024, probably towards the end of the year. But the way this stuff is moving, chart still looks very good, even in the near term, right? It's breaking or about to break yearly pivot, yearly highs, previous inverted head and shoulders, made another shoulder, right? There's nothing bearish about this chart whatsoever. Marathon, I'm a little less bullish on. So they hold a ton of BTC. I just think you have to dodge a lot of bad news with the miners. I think the easier trade is anything else but the miners. I think the miners continue to do well. I just think it's a tough ask for me to buy and hold the miners. But based on how much BTC Mara holds, sure, why not? And this chart, and Coinbase for that matter, kind of reminds me of ARK. Now ARK has a ton of Coinbase, so it makes sense that the chart looks like Coinbase. This chart has no reason to go back to 77. It is a pile of absolute junk, but that's what the tech wants. A lot of people were super bearish ARK, continue to be bearish ARK based on the holdings. I'm not going to disagree. I'm just looking at the technicals. The technicals look very good. Tried to break down, didn't, back into the weekly cloud. So Marathon, kind of similar in a sense that if it can hold 1250 into the new year, it's pretty hard to argue against some sort of exposure because this is what, a 300% move from here. So the question I have for myself is, you got some cash. Do you buy the Qs? Do you buy Amazon? Do you buy Microsoft? Do you stay in cash? Do you go Coinbase, BitX? Do you split it up a little bit? Something to think about. Or maybe I'm just flat wrong. We're going to be turbo bearish fairly soon. Lastly, I'll just mention the miner mag in case you're hemming and hawing about analyzing the miners. They've got the best repository for any company information you'd want on a miner. That's all I have for this one. Like, dislike, comment, share, subscribe. No videos till Sunday, so have a good holiday and happy trading.